If you're wondering whether now is the right time to buy, build, or wait here along the Grand Strand, you're in the right place.
Because December just gave us some very interesting shifts in pricing, inventory, and buyer power, and some of them might surprise you.
So we're breaking down what happened in December, how that compares to November, and how it compares to the last 5 years, and what that tells us about where the market is heading. All right, let's start with single-family resale homes throughout the Grand Strand, which in December closed at an average price of $576,000. That's a pretty solid jump up from November.
But here's the twist. Even with higher prices, buyers didn't overpay. The list-to-sales price ratio dipped slightly to 96%, meaning there's still room to negotiate.
And homes are taking about the same amount of time to sell, 107 days on market on average. And inventory actually dropped to a 5.3-month supply.
That puts us right in a balanced market. Not a frenzy, but not frozen.
And even though homes sold higher, the current average list price is $596,000, which is actually down from November. Another sign buyers still have leverage.
Now, let's talk condos and townhomes across the Grand Strand. December closed at an average of $239,000, which is down from last month.
And the list to sales price ratio also dipped to 96.1%, and condos are selling faster, about 118 days on market.
And inventory dropped again to an 8-month supply. That still keeps us firmly in a buyer market territory.
And prices reflect that. The average list price is $256,000, down from November.
Oceanfront condos saw some movement in December. They closed at an average of $296,000, which dropped again this month.
Sellers gave a little more this time. The list to sales price ratio slid to 95.4%, and condos took longer to sell at 146 days on market.
Inventory did come down to a 9.7-month supply, but let's be honest, that's still a strong buyer's market.
Interestingly, though, the average list price jumped to $303,000, so sellers are still testing the market.
Carolina Forest had a strong December. Single-family resale homes closed at an average of $648,000, back up again.
And sellers held their ground. The list to sales price ratio climbed to 97.8%.
Homes sold faster too, 101 days on market, and inventory dropped to a 5.2-month supply.
That officially puts Carolina Forest back into a balanced market.
Condos and townhomes in Carolina Forest closed at $197,000, down from November.
But sellers did a little better on negotiations. List to sales price ratios went up to 96.5%, and condos sold faster at 134 days.
Inventory dropped to a 9.4-month supply, still a buyer's market, but tightening.
And now, here's the category that everyone's watching, new construction. Wait, before we get into that, have you hit that subscribe button yet? If not, make sure to do so and ring that notification bell so you don't miss out on our weekly videos.
In December, new homes closed at an average of $412,000, up from November, and builders held strong. The list to sales price ratio jumped to 98.6%.
Okay, so now let's zoom out for a minute, because while month-to-month changes are important, the real story shows up when we take a look at the last 5 years.
When we compare prices from 2021 to 2025, every segment of the Grand Strand market is still sitting well above pre-boom pricing, even with recent slowdowns.
For example, in 2021, the average single-family home across the Grand Strand was selling in the low to mid 300s.
Fast forward to 2025, and even with a calmer market, we're consistently seeing averages in the $500,000 to $575,000 range.
And that's not a short-term spike. That's a new pricing baseline.
Condos tell a slightly different story.
In 2021, condos were commonly selling in the low 200s.
By 2025, we're seeing average prices closer to the mid 200,000s, with some ups and downs depending on the inventory and interest rates.
So while condos haven't climbed as aggressively as single-family homes, they're still priced significantly higher than just a few years ago.
Oceanfront condos saw some of the biggest swings over the last 5 years.
In 2021 and 2022, we saw rapid appreciation. prices jumped quickly as demand exploded.
From 2023 through 2025, prices cooled and stabilized, but they never returned to pre-boom levels.
Today, buyers have more negotiation power, but they're still buying into a market that's structurally more expensive than in 2021.
Now let's talk about Carolina Forest.
Yes, because Carolina Forest is a great example of long-term growth.
In 2021, average single-family homes were often selling in the mid-400,000s or lower.
But by 2025, many months show averages well into the 500s and beyond.
And what's important here, demand hasn't disappeared. Inventory adjusts, but buyers continue to choose Carolina Forest.
And buyers also continue to choose new construction, which has actually been one of the most consistent categories over the last 5 years.
In 2021, new homes were often selling in the mid-300s. By 2025, averages are regularly in the low to mid-400s, even with incentives and rate buydowns.
And that tells us that builders have adjusted pricing, not retreated.
So if you're waiting for prices to go back to 2021 levels, the data just doesn't support that.
What has changed is leverage. Buyers today have more time, more options, and more negotiation power.
But long-term pricing tells us this market reset. It didn't rewind.
And that's why strategy matters more than timing right now. And whether you're buying, building, selling, investing, understanding these long-term trends is how you make the smart decisions.
At the end of the day, the right move in this market isn't the same for everyone.
Some people should buy or sell now, some should build, and some might be better off waiting. And the numbers help to tell that story.
If you want help understanding which path makes the most sense for you, we'd love to walk through it with you together.
Whether you're thinking about buying, selling, building, or just planning for the future, reach out to us at Carolina Crafted Homes. That's what we're here for.
And if this video was helpful, we would really appreciate if you would leave a like, subscribe to our channel, and hit that notification bell so you don't miss our weekly videos.
We'll see you on the next one.